Hello guys. This is our step index. If you still remember yesterday, I put up a video where I was taking you through a sell setup or a sell opportunity that I saw at the time, and it did go well. If we can just remind each other about how it went, then I will, then we will continue and see if you can't get any new trades here. So if you're new here, make sure that you subscribe and also you hit the bell icon, because this is basically what I do here on YouTube. I just put videos here where I just go through charts and then I just give you tips on how you should approach the charts, right? So yesterday when we were doing the analysis, the price was still this is what we had at the time, right? So during that time, because the price was just like this, and we had a very nice bearish trend line coming from there, passing somewhere there, right? And at the time when I was making the comment, I said we did have a sort of a short-term bullish momentum when the price did this, and then it allowed us to have this short-term bearish trend line, this one here, and this being the closest sort of a support, and it was taken out, and the trend line also taken out. Then we were like, this area here is the one that was responsible for that, and then I said you can go and sell, and you'll be targeting some of these areas. See where I put the horizontal line, which is where I put, using this. So that's why when you're making your decisions, you need to make sure that you make that based on the structure that you're seeing on your chart. So this is where I placed my take profits, right? So I had a couple of trades from here, and then I exited I think 3 of them here, and then I left 2 running, right? So with the 2 that was running, I then made sure that it's not a loss. I mean, imagine the price coming here only for it to go up like this and then take you out. So these ones here, they were like a full take profit, which is around, I think, more than 240 points drop from there to here, right? And then what you need to do, which is very important, you must always make sure that you are in charge of your stop loss. Your risk management, your trade management is very important, because now if the price moved all the way down like that, and then you're still very much confident because you're seeing this drop here, and then you're like, it's going to continue like that, you're neglecting this key area here. This is not an area that the price can just pass easily. Yes, it can do that, but you don't know what's going to happen. Nothing is guaranteed. So for such, you need to make sure that you just go and do what, and make sure like you target those sensitive areas should the price respect them, like it did in this case, right? And then from there it just went up like that. So this is what we have currently, and now we can see the price went all the way up to the key areas on what, on your H4, which is like the sort of the roof of the structure. Has been struggling to break that level for a very long time. And if I still remember the other time frames, it's just that now the tricky part will be that yes, the pin bar is still holding. Remember, we've got this bearish pin bar there. It's just that we haven't yet moved lower than it, but this can give us hope to say maybe by the time the week ends we will be somewhere down there, but we don't know. But the fact that we haven't yet went higher than it, we can still try and sell, which is what I think we should now start to do, right? Around here, when you get like a chance to enter, you can do so. But remember, even when you're selling, you're not going to do this. You need to remember that the price has been struggling to pass here for days now. So what makes you think that all of a sudden it will just go there and break it? So because you don't know whether that level is going to be broken or the one above, it will make sense for you to just go there and neglect this when you're holding a sell trade. So you'll get your sell trades and you still be targeting around here. You can leave one trade running just in case the price value continues like that, but because you don't know what's going to happen, you need to say the price has now reached my next opposing structure, I'm going out. So you can use the structure on M15 to try and get your entries, where you go and say M15 is now bearish because we are very much, okay, let's use the actual trend line, because we are very much bullish, or like yesterday, after remember my take profits were here, after we hit the take profits in that sensitive area, and then the price pushed up, and then we were bullish, and now all of a sudden the price broke that bullish trend line, and it also went lower than the nearest area of what, area of support. And because of that, we are saying the bears are very important, and those bears, they come from where? This is the guy here at the top, is the one that did all of this pushing down, breaking the 2 key structures. So anywhere from somewhere there, just that I can't draw, anywhere from somewhere up there, you are allowed to try and catch a sell, and then hope that you will drop like this until somewhere there. You can use some of this as your take profits 1 and 2s, but the max TP, has to be somewhere around there, which is the same as what I was showing you here on H4, saying that you get that and then you're still gonna do your exit there. So that's what you're gonna do. So that's what I'll be doing today, and then we will see how that one is gonna go. So I'll see you guys in the next one. And this is where we are a couple of hours later. So I want you to learn a thing or two from this. So remember when I made the video, the price was coming from this, it missed my area of interest, which started from there, right? And I had placed sell limits around there, right? And what happened was that the price eventually did go there and trigger those orders, right? And when it triggered them here. This is the first point where the price went and touched the thing, the area of interest, and then it moved to the downside. What you need to keep in mind, which is something very, very important, something that I always share in the video, I always tell you that when you are having trades, make sure that you always target the next opposing structure, right? In this case, what we can see was that when the price was coming from this going there, we did not have this short-term trade to the upside. We did not have it, right? Reason being, we didn't have any other swing, we only had this one. But the minute the price went up and moved higher than this point, that's when you could say what the bulls are trying to achieve, pushing to the upside towards this area of resistance that defeated them when you did this. It seems like they are having some higher highs like that. And when you had that, that's when you could draw your trend line there. So basically, when I entered my trade there, it means now because I'm holding a sell trade, the best thing to do was to like target the next opposing structure. In this case, the next opposing structure was this area of support here, this one here, and also the trend line. And look what the price did. The price did move from that highest point, and then it went all the way down, and it touched the trend line. So what you're supposed to do when that happens, when you're holding a trade, if you're holding a sell trade and then you see the price hitting a valid support or it is hitting a valid bullish trend line, you don't have to be greedy. You don't have to act like you don't see what is happening. So meaning in my case, this is where I'm supposed to exit most of the trades, or even if it's just one trade, and then you know that already the opposing structure is hit. So which means what you need to do from there is to make sure that the remaining trades, what happened with them, you move to break even, because the distance that you traveled was decent amount of space. So in this case, now unfortunately I did not do that, but it's not the end of the day. I can still try and recover that loss, and it was not a big loss simply because risk management is always on point. So basically, the price moved from this to this, giving me all these pips. I did nothing about that, and then it went up, got rejected again until it moved higher than this guy. That's where I lost. And then after doing that, that's when it moved to the downside. This is what I was anticipating, but it took a while to come. That's why I'm saying it doesn't matter. I always tell you, it doesn't matter how many times an opposing structure is hit. You must never say now it has been hit 2 times, it needs to be broken, the third one is going to break it, or it has been hit 3 times, the fourth touch is going to break it. You don't know, which is why when that area is hit or that trend line is hit, if you're holding trades and that trade, that zone or that trend line can push against the trades that you're holding, you need to make sure that you exit some of those trades there, because of what? That's your next opposing structure. So it's not about the loss that I'm showing here. Yes, anyone can have losses here and there. What is important is you knowing that you need to control that those losses. The amount that you are risking shouldn't be a lot to a point where it compromises your balance, right? And you need to make sure that you always have a stop loss, because no one knows where this thing is going to go. Yes, you can make a prediction, and it's possible that it might not go in your favor, right? So where to from here? So if you look at this one now, because the reason why the initial, if I can use a different color, the reason why the initial uptrend came to an end was because of what happened from this high here. And now recently we moved higher than that high, so which means this broken trend line is now restored. You can bring it this side, you can now remove it and say this is no longer a short term, a bullish trend line. It's actually a bullish trend line, because the price or the trend at that point, it moved back to being bullish the moment it moved higher than that, because the reason why it became bearish was because of this high there. So the moment we moved higher than it, that's when it became bullish, and now we are back to bearish again because of what the bears pushed it down and broke the, so meaning this guy cannot be our closest resistance anymore. So the closest one now will be this one here. If I can just mark it for you, this is now the closest resistance. And what did this closest resistance do? If you look at it, it did the same thing. It pushed to the downside, broke an area of support, broke a trend line. The same thing that this one here once did. It pushed to the downside, broke the support, broke a bullish trend line. So it's a very nice support, resistance that pushed down and changed the market structure. So if you get some confirmation there, you need to make sure that you can take a sell if you get confirmation, right? So because remember, anything can happen. So you get confirmation there, maybe this will be just a retest, and then you push to the downside. Because even if you remember on weekly, I think it's weekly, yes, we do have a weekly bearish pin bar. So even though the current week is pushing up, but for as long as it doesn't move higher than that pin bar, this can still change and move to the downside. So for that reason, yes, we do qualify to try and trade the downside from house on M15 from here. Anywhere from there, you get a pin bar or anything that you can use as your confirmation there. You can take that and hope that the price will push to the downside. So I hope this video, that what I'm sharing here, you will learn a thing or two. So it's not about the loss that I was showing you. No, that's not the point. Yes, it's a loss, but if I had acted if I had stood by the rules. But here it's not that I broke the rules. I was not in front of my computer, and this is a very small, it's a very small time frame. It's M15, right? So I was not in front of my computer. So you can close your computer for an hour, though you will find 4 new candlesticks. Those candlesticks, they can change the structure, which is what happened here. So I was not in my thing. So if I was watching it, when the price hit the next opposing structure, I was going to do something about that. The same way, that's like what I did yesterday when I was trading on H1, when we were trading this. Remember the sell that I got from this, and I targeted these guys here. And now when that happened, because we've hit the next opposing structure, I exited most of the trades, and now I moved the stop losses to below the break even, so that when something like this happens, you don't end up losing. Imagine you were in a nice profit, now you end up with a loss from the same trade. No, you need to be able to, you need to be very strict when you're managing your trade. That's very, very important. You must always make sure that your actions, they are, you're trying to always protect your capital instead of what, compromising it, putting all of it on the line. Otherwise you won't succeed, or you won't survive. So to make sure that even if you get a loss, you always survive, you don't lose all your money, you must always have a stop loss. Use a reasonable lot size for your account based on the account size that you have, and always make sure that when the price hits the next opposing structure, you're not greedy, you exit your trades, you move to break even, and so on. I hope you learned something from this video, guys. So this is basically everything that I'm always showing you, and even the guys that I'm mentoring, they know. I always emphasize on this, the importance of knowing where the price is most likely going to struggle to pass, so that you can place your take profits around it there. All right, guys, so that's all that I wanted to share with you guys, and I hope you've learned something from this. And then otherwise, if you're new here and you like this kind of videos, you can just subscribe there, and also don't forget to like, so that YouTube can push this video to other people like yourself who would be more interested in learning this type of approach. Otherwise, I'll see you guys in the next one. Thank you.